But there was one moment that made it all worthwhile when Trump finally pinned the tail on the donkey, called out the Federal Reserve, said the only real recovery we've had is this huge inflation on Wall Street, and that we are now facing one big fat ugly bubble, as he called it. And he's absolutely right about that.
Welcome to the Power Market Report. I'm Albert Liu. Very happy to be joined today by David Stockman, the former congressman and director of the Office of Management and Budget under President Reagan from 1981 to 1985. He's also a best-selling author of two books, The Triumph of Politics and The Great Deformation. His new book, Trumped, A Nation on the Brink of Ruin and How to Bring It Back, just launched. David, thank you very much for joining me today on the Power Market Report. How are you?
Great, and good to be with you, and I look forward to the discussion. There's a lot of great issues to pick apart here and understand.
Yes, so many issues, so little time. Let's start with the debate. We had this debate this week, and one side, I guess the mainstream media is proclaiming victory.
Yes.
For Hillary. If you look at a lot of the other polls, the more conservative polls, they're coming out decisively in favor of Donald Trump. So, as usual, never know what to make of this. What was your feeling?
Well, my feeling was it was 90 minutes wasted. But there was one moment that made it all worthwhile when Trump finally pinned the tail on the donkey, called out the Federal Reserve, said the only real recovery we've had is this huge inflation on Wall Street, and that we are now facing one big fat ugly bubble, as he called it. And he's absolutely right about that. And I thought that was the moment that maybe they would get into substance, and it didn't happen. It ended up, name calling and a lot of history that's essentially irrelevant to the big issues. But I think at the end of the day, the debate is really, are you for 30 years of this status quo, of wars everywhere abroad, of the massive debt that's been created both in the government and private sector, of a rogue central bank that's turned Wall Street into a casino, or do you need fundamental sweeping change? Do you need to, clean the stables? And I think that's what Trump stands for. Hillary stands for the status quo, 30 years of what I call failed policy. And that came through, but not nearly as sharply, not nearly as effectively and cogently as it should.
Yeah, I think I agree with you there, and I think Fox News is trying to reach you there on the phone. Just tell them you're busy with something more important right now.
Okay, I'm sorry about that. Maybe I could turn this off, but
I'm just playing with you, just playing with you, David. But are we making the mistake, though, of sort of mistaking or conflating our own values with that of the voting public? Does the voting public really care about the Federal Reserve, and do they actually understand what a financial bubble is?
Yeah, I think they do, because they understand that it's not doing anything for Main Street America, and that there is a massive inflation of value on Wall Street that doesn't make any sense. They know the good jobs are disappearing because they've been offshored. They know that the Fed is trying to create more inflation when they can't keep up with the their paycheck isn't keeping up with the inflation we already have. If they're savers, and a lot of households are, or they're retired or nearing retirement, and see they're getting zero return on their lifetime of savings, they know the Fed isn't working for them. I have an analogy in the book which I think is worth bringing up, and that is kind of the theoretical steel worker, spent 40 years sweating in the mills, was a thrifty type, saved $250,000 of cash, is in his 70s today, has it in a bank account because he wants to keep liquid and doesn't want to get in the stock market and be wiped out for the third time this century. And he's earning the equivalent in interest of one cappuccino at Starbucks per day. That is outrageous. That is one of the greatest injustices that you can think of. He knows that that is the result of Fed policy, and it's, I think, beginning to trouble Main Street America as to why the gamblers on Wall Street get the free money to essentially speculate with, and why they are getting no return whatsoever on their savings and falling further behind inflation on their paycheck.
Yeah, and he might have to spell it out in more simple language, but I do agree with you. And I want to move to your book, David. I think someone needs to advise you on timing, because it's a great timing of a release if you want to sell copies of this book. But if you actually want to run for president, which I wish that you were doing, the book has to come out much earlier.
Yes.
Well, I'm kidding there, obviously, but it's the ideas are wonderful. And I'll be honest, it doesn't satisfy the purist in me 100%, but it's by far the best that you'll see anywhere, and it's very practical. And I want to just read an excerpt here.
Sure.
You are describing Trump in a way that doesn't really advocate him as a solution, but you say it might sort of coincidentally result in something good. You say he's basically a big wrecking ball for the establishment. And I want to quote directly. You say, unfortunately, Donald Trump appears to be an economic blank slate who can embrace any and all of the above errors and delusions. That's because his economics are purely glandular insofar as it's possible to discern. He has never been troubled by any kind of economic model or coherent philosophy at all. But alas, that is also his virtue. That sort of sums it up, doesn't it?
Yeah, I think it does. And unfortunately, we don't know where that will lead. But I think some instincts aren't all that bad. You know, he has profited from this bubble finance regime his whole life, because cheap interest rates are the mother's milk of real estate speculators, and that's essentially what he has been. But on the other hand, unlike a lot of Wall Street types who pound the table and say the Fed dare not, allow interest rates to rise even by 25 basis points, I think he has enough perspective at this stage of life to say, hey, this isn't right, this isn't sustainable, this is a rigged system that's going to lead us into trouble. And that's what he said the other night. We better be careful here, because if we ever allow interest rates to normalize, and frankly, we have to. We can't keep them at zero forever, or you'll blow up the monetary system. If we allow them to normalize even a little bit, he said, we're going to have one rip-roaring crash. I think he's right. Now, whether he can elect and choose new directions that will make a difference, I think still hangs in the balance. He actually has pinpointed a huge problem, our massive, continuous, chronic current account deficits. It's not 1 year or 2 years or a 5-year cycle. It's been since the late 70s. We have had a $8 trillion negative balance with the rest of the world. And you can't do that because it means you're essentially offshoring your economy and borrowing from your future. Now, I think where he is wrong is in the cause. I think the cause is not bad trade deals or NAFTA or even, some practices of the Chinese, which they clearly manipulate their currency. We can get into that. They subsidize exports. They steal technology and all that. But those aren't the basic causes. The basic cause is a monetary policy that has flooded the world with excess dollar liabilities, encouraged other governments to buy in those dollars to hold down their exchange rates, and in the process, fundamentally distorted pricing in the fixed income markets of the entire world, permitted the U.S. economy to borrow enormous amounts of money so that we could live beyond our means, so that the middle class could make up for shrinking real wages with more balance sheet debt. And that has all worked for a few decades, let's say, but I think the game is over. We're at peak debt. None of this is working anymore. We're sort of in the payback period where the day of reckoning is going to happen.
Yeah, and I think one point that you make over and over in your book, I think, is to point out that whatever prosperity, real or imagined or temporary that has come out of these policies has been confined mostly to the coasts.
Right.
And then you have this giant area, the middle of the country, that you call it flyover America, that have been really left out. And I borrowed, as I mentioned, without permission, a couple of your plots that I think illustrate this very well. The first one I'll throw up there is just the real median household income plotted against the broadest measure of the stock market, the Wilshire 5000. And you see one is down to the right, the other is up to the right. Clearly people who have had equity positions have benefited from the low interest rate policy.
Yes, absolutely. I call it bubble finance. I actually tracked the financialization of the U.S. economy from 1987, when Alan Greenspan arrived at the Fed, checked in his gold standard views, and became the maestro and the orchestrator of bubble after bubble until his 19 years were over. But I think one of the things you could see in the chart that I present is that in 1987, the GDP was in the range of $4.5 trillion, and the total value of all the debt in the U.S. economy plus the market value of equity was about $10 trillion. So in round terms, the financial value of stock and bonds was about 2 times GDP, 2 times income. Today, it's 93 trillion, when the GDP is only 18. Today, the financial sector is 5.5 times income, not 2 times. Nothing like it existed historically. And so therefore, what we have is a completely deformed system where the central bank has inflated and bloated the financial system beyond recognition. None of the prices of these assets reflect sustainable value. I mean, the federal government has been borrowing money on a 5-year and 2-year basis for practically nothing. The PE ratios in the stock market today are crazy, 25 times or more earnings that are falling. So what we have is not just a small cyclical bubble that people think about, .com, or even what occurred in late 2007, 2008 before the Lehman crash. What we have is a 30-year financial inflation that is a clear and present danger to the whole system. Now, while all that was going on, go back to our flyover America, here's what was happening to the real income. The chart you cited, I used the deflator, the inflation rate that the BLS puts out. But I also, in another part of the book, quarrel with that strenuously because I think it way undermeasures the true cost of living that Main Street America faces in its healthcare, in its housing, energy, and food. So we created something called the flyover CPI. We put more weight in those 4 factors. I call it the 4 horsemen of inflation than the BLS does. And then we came up with a more accurate measure of shelter costs based on rents that are actually paid in the private markets and based on an accurate index of medical inflation. Now, when you do that, you find out that between the year 2000 and the present, the median real income adjusted for honest, accurate inflation is down 21%. So Flyover America has seen its living standard shrink, not by 4 or 5%, as the BLS even admits, but by more than 20%. There's nothing like it in American history. For the first time in 100 years since the Industrial Revolution, the country isn't marching to greater prosperity together. It's bifurcated. The tiny elites who benefit from this huge financial bubble have had enormous increases in real wealth. The Main Street, 90% of the population has seen shrinking paychecks in real terms, shrinking living standards, and no gain at all in their net worth because they can't afford to gamble in the stock market heavily. They have to save in more liquid, more safer assets. And the Fed has decreed that for the sin of wanting to be liquid and safe and short term, you are entitled to no return on your money. And if you want to, get in line with our dictates and buy some high yield junk funds or speculate in the FANG stocks, Facebook, Amazon, etc., that's what you need to do because we think it's better for the economy. I call it the monetary Politburo. It's kind of a dictatorship that is essentially ruining the great capitalist economy of America. And that's what I think this election is about. Trump may not know the new direction, but he is at least saying, stop, hold the presses. We can't keep doing what we're doing. Hillary says, isn't it wonderful? We had a temporary crisis in 2008. We got it all fixed. Obama saved us. I'm going to do more of the same. Janet Yellen walks on water. More power to her. The Fed is a wonderful engine of prosperity. Now, you can't get a more dramatic contrast in views than what I've just stated. But essentially, that's what this election is about. And I hope in the next debate, they'll get to it. They'll join that issue because it really, unfortunately, didn't happen in the first one.
David, I want to shift gears a little bit. Something I really appreciate about this book is how hard you are, basically on everyone. I mean, going back to Reagan, Greenspan, of course, the recent Federal Reserve chairs, but Warren Buffett, Morgan Stanley, GE, you're very critical of all of them. And there's not many people that you see that, I guess, that appear regularly on cable news anyway, that are really against the bailouts and are against the TARP. You say in the book that it wouldn't have been the end of the world.
Absolutely.
If we didn't bail out these institutions.
Yes.
So can you reiterate that here for the viewers?
I can try to do it briefly, but that's what my prior book was all about. The Great Deformation was essentially started as a refutation of the case made by Bernanke and Paulson and the rest of them after the Lehman crash that we were heading into a black hole. Everything was going to unwind. I demonstrate in there was no banking crisis in America. It was all in the canyons of Wall Street. There were a few leveraged behemoths left. They would have gone down for the count, basically Goldman and Morgan Stanley. Today, 7 years later, the bits and pieces would have reorganized themselves into free market institutions run by chastened people who would have learned the lesson about too much speculation, too much debt, too much greed, and too much of a mismatch between illiquid long-term assets and hot overnight money, which is how all of Wall Street was financing itself. So they've created what I call a horrible myth, that urban legend, if you will, that without all of those emergency measures, everything would have unwound. Not even close to truth. We could have done without Morgan Stanley. We could have done without Goldman Sachs. GE had a problem funding its commercial paper, and I say, so what? I proved they could have issued long-term debt. It would have been highly dilutive. It would have hit their P&L pretty hard. Jeff emailed, would have not got his bonus that year, but so what? Why should the taxpayers of America, why should we rig the rules of capitalism when you have to have discipline, when you have to have the right to succeed as well as fail? We didn't need to bail out Jeff Imelt's bonus. That's what essentially we did when they stepped in and created the commercial paper program for GE. Now, there's a lot more detail to this, but all of it, I think, refutes the urban legend that Bernanke put out. And it's important to understand he's one of the greatest evildoers of modern times. Bernanke is an evildoer, and he has a view of the Great Depression, which is totally wrong. He's a phony scholar, and he says that only if the Fed had only turned on the printing press in 1930, the Great Depression never would have happened. He's full of it. That's totally wrong. I refute that chapter and verse in my book. It's Another Day, Another Story. But a lot of this came from Washington being cowered into believing that Bernanke was right when he ran around with his hair on fire saying, that the sky is falling. It really wasn't.
David, I'm loving this, but we're short on time, so I want to get in a few more questions, though.
Sure.
GE was not the only firm that had problems with commercial paper. If we didn't step in and backstop, liberal use of we here, but if FDIC or whomever didn't backstop the money market, the market for commercial paper, what would have happened to these other firms, though, payrolls and whatnot?
That's an urban legend. I go through it. The money market funds, the overwhelming share, there was about $3 trillion outstanding at the time. $2 trillion of that was basically in government-only funds. There was no flight from those funds. What happened was there were a few funds that owned commercial paper as well as bank and government paper. Money simply shuffled from those funds to the government-only funds. The commercial paper market shrunk, and so what? It's today 1/3 what it was in at the eve of the crisis, and the economy seems to be bumping along pretty well. Now, the idea of payrolls not being paid is ridiculous. Every industrial company that had a bank revolver, let's say Ford Motor Company, had a commercial paper program, had a bank revolver backup that they paid a standby fee for years and years just in the event they couldn't roll their commercial paper. There is not any major bank that refused to fund a backup revolver when asked by any industrial company. It never even happened. The banks were not insolvent, and even if the FDIC had to step in and bail out the bank, not the holding company, but the bank at Citigroup, it would have performed on its obligations to fund the Ford Motor Company revolver or any other company in America. So it is really unfortunate that they have come up with all of these scary bedtime stories about payrolls not being met and people not being able to access their money market account. All of this is in my book, by the way. The first couple chapters called The BlackBerry Panic of 2008. In short, what it meant was that all of these guys around Paulson and the Fed were running around looking at their BlackBerries, because we didn't have iPhones then, looking at their BlackBerries, panicking because they saw the price of Goldman Sachs and Morgan Stanley plummeting. But that wasn't a measure of the danger in the real world, and the panic was created by the policymakers in Washington, and it was and then, of course, the gamblers on Wall Street profited because they got bailed out falsely and unnecessarily.
Let me hit you with one more quick one
Sure.
Before we part. You don't talk about eliminating the Fed, but you sort of talk about eliminating virtually everything it does right now, getting rid of the FOMC, going back to a Carter Glass Federal Reserve, where all they do is really discount bills. They don't buy sovereigns, they don't buy corporate bonds, they just discount bills, mobilize that rate, and take basically on receivables and finished goods.
Right.
Can you talk briefly about that? We only have about 2 minutes left.
The whole idea was the Fed was a banker's bank. That's what Carter Glass, chairman of the House Banking Committee, created. It could not own government debt. It did not have a mission to target interest rates or to target inflation or GDP growth or housing or anything else. It was to allow the free market to set interest rates and provide liquidity at the free market rate, even if it went to 30%, plus a penalty spread on top, if banks that needed funding or liquidity presented good commercial collateral that was based in the real, Main Street economy. Then that was basically how the Bank of England operated. That was the model for it. And what happened since 1917, when the Fed was drafted into the service of financing World War I, is gradually it has become an institution of national monetary planning and management that it was never intended to be. So you get rid of the FOMC, you make it illegal to buy another dollar of government debt, You have a standby window. You have very strict criteria for eligible collateral. You tell the Fed, get rid of all your PhDs. We don't need one of them because we're not going to run the economy. The market will, the people will, the investors, the business. What we want is green eye shades. What we want is accountants who will look at the collateral that any eligible bank brings, and if this receivable or finished inventory collateral is good, we'll make a loan under the rules at a market rate of interest. So if we replace the PhD standard with the green eye shade banker's bank model of Carter Glass, we would unleash capitalism. We would put interest rates back into a market mode. We wouldn't have excess speculation because the market would discipline itself through rising and falling interest rates and other financial prices. In other words, the heart of capitalism is honest price discovery. The essence of Keynesian central banking is to destroy it. That's the juncture we're at. If we want to have prosperity, we've got to shackle the Fed. We've got to unleash the free market in the financial system. And whether we accomplish that or not remains to be seen. But at least in the attacks that are now starting to happen on the Fed, you saw it on Capitol Hill a couple of days ago, you saw it in the debate with Trump, maybe we're waking up that we have a rogue institution that is ruining prosperity in America.
David, I got to get this in before I let you go. If all the Fed is doing is discounting bills at a mobilized discount rate, which is going to be very high during times of stress, couldn't that function of liquidity be provided by hedge funds and other speculators?
Yeah, I think you could make that point. But it would be far better. My view is a more practical one. It would be far better rather than have a fight about the existence or non-existence of the Fed, which is probably really a losing battle, or in getting into some arcane argument about the gold standard, which I also support. But at least if you go back, take a leaf from Carter Glass. Now, the reason I go for this is that a lot of people think Carter Glass must have been a sound guy. He was behind Glass-Steagall, right? And it was the repeal of Glass-Steagall that contributed to the crisis in 2008. So I kind of link this back from a point of view of selling the case and the art of the possible back to Carter Glass and the banker's bank vision that he had for the Fed.
All right. I've been speaking with David Stockman, former director of the Office of Management and Budget under President Reagan, also the author of Trumped, A Nation on the Brink of Ruin and How to Bring It Back. Please go out and get that book. David, really enjoyed speaking with you. Thank you very much for making time for us today.
Great. Thanks, and good to be with you.
Thank you. And don't forget to visit powerandmarket.com for insightful interviews with the world's leading experts on economics, finance, and investing. Till next time, take care. Hi, I'm Albert Liu, host of the Power and Market Report. If you enjoyed this video, I invite you to subscribe to my channel by clicking the button on the top left of the screen. And don't forget, you can also visit us on Facebook and at powerandmarket.com. Thanks again for watching.